How inflation is changing our world. What you need to know. Inflation, the gradual increase in prices over time, has always been a part of the global economic landscape. However, in recent years, inflation has become a more pressing concern for individuals and governments alike. From the cost of everyday goods to the value of savings, inflation's impact is being felt worldwide. Understanding how inflation is changing our world and what you can do to protect your finances is crucial in today's economic environment. The current state of inflation. Inflation rates have been rising globally, driven by several factors. The COVID-19 pandemic disrupted supply chains, leading to shortages in essential goods. Governments worldwide responded with massive stimulus packages to support their economies, increasing the money supply and fueling demand. This combination of disrupted supply and increased demand has contributed to higher prices across the board. For example, in the United States, the inflation rate hit a 40-year high in 2022, reaching 9.1% in June. This surge in inflation was primarily driven by skyrocketing energy prices, supply chain bottlenecks, and labor shortages. Similarly, the Eurozone experienced inflation rates above 8% in 2022, driven by rising energy costs and supply chain disruptions exacerbated by the war in Ukraine. Emerging markets have also been severely affected. Countries like Argentina and Turkey have been grappling with hyperinflation, with rates exceeding 50% and 70%, respectively. These extreme cases highlight the devastating impact that uncontrolled inflation can have on an economy, eroding purchasing power and destabilizing currencies. The impact of inflation on daily life. Inflation's most immediate and noticeable effect is on the cost of living. As prices rise, the purchasing power of money decreases, meaning that people need more money to buy the same goods and services. This is particularly challenging for individuals on fixed incomes, such as retirees who may find their savings insufficient to cover rising costs. For instance, the cost of groceries has risen significantly. In the United States, food prices increased by over 10% in 2022. Essential items like eggs, milk, and meat saw some of the highest price hikes, straining household budgets. Housing costs have also surged, with rental prices in major cities like New York and Los Angeles climbing by over 20% in some cases, making it harder for people to afford a place to live. Energy prices are another area where inflation is hitting hard. The price of gasoline, natural gas, and electricity has increased dramatically, partly due to geopolitical tensions and supply chain issues. This has led to higher transportation costs and more expensive utility bills, adding to the financial burden on households. Beyond the immediate financial strain, inflation can also have long-term economic consequences. As prices rise, consumers may cut back on spending, leading to lower demand for goods and services. This can slow economic growth and lead to higher unemployment. In extreme cases, hyperinflation can destabilize economies, causing currency devaluation, loss of investor confidence, and social unrest. Protecting your finances in an inflationary environment. While inflation is largely out of individual control, there are strategies you can employ to protect your finances and minimize its impact. Invest in inflation-protected assets. Consider allocating part of your investment portfolio to assets that tend to perform well during inflationary periods. These include real estate, commodities like gold and oil, and Treasury inflation-protected securities, TIPS. TIPS are government bonds specifically designed to protect investors from inflation as their principal value adjusts with the inflation rate. Diversify your investments. Diversification is key to managing risk, including inflation risk. Spread your investments across various asset classes such as stocks, bonds, real estate, and commodities. This can help mitigate the impact of inflation on your overall portfolio, as different assets respond differently to inflationary pressures. Focus on growth-oriented investments. Stocks in companies with strong pricing power, those able to pass on higher costs to consumers without losing business, can be a good hedge against inflation. Sectors like technology, healthcare, and consumer staples often have companies with this ability. Increase your income streams. Look for ways to increase your income to keep up with rising costs. This could involve asking for a raise, starting a side business, or investing in education and skills development to enhance your earning potential. Reduce debt. High inflation often leads to higher interest rates. If you have variable rate debt, such as credit card balances or adjustable rate mortgages, consider paying it down as quickly as possible. Fixed rate debt, however, can be more manageable during inflation, as the real value of your payments decreases over time. Cut non-essential spending. During periods of high inflation, it's wise to review your budget and cut non-essential expenses. This can free up more money to cover the rising costs of necessities like food, housing, and utilities. Conclusion: inflation is changing our world in profound ways, affecting everything from the cost of living to the stability of economies. While it's a complex and often challenging issue, understanding its impact and taking proactive steps to protect your finances can help you navigate this uncertain economic landscape. By investing wisely, diversifying your portfolio, and managing your expenses, you can mitigate the effects of inflation and safeguard your financial future.